Hey guys, welcome back. So in this video, I'm going to talk about the three pillars of price action trading. In my previous video, we had discussed about what price action trading is and how exactly it is better than indicator based trading. So in this video, we'll actually find out what these pillars are and how these pillars help us predict price movements and also take action like taking an entry in a sell or a buy position. So by the end of this video, you'll have all this knowledge, and in the videos after this, we'll cover market structures and everything else. So let's get started. So first we have support and resistance. So these are horizontal levels, and what they do is, for example, let's say we have a daily support and resistance lines. Okay, just right here. If we see the price action, right, on the 1 hour, the price just went bullish, right? The price went bullish on the year, breaking the structure clearly. For once, it was bearish, it gave a like lower highs, and then the price kept moving down, creating small structures. And then what it did was it started reversing from right here, and now this became bullish. The whole price structure changed and it became bullish. And what happened was it hit a support level. So this support level is so important that it changed the whole price action on the smaller time frames for the scalpers who trade like on very small time frames. It's a very big thing because imagine 30-minute going down slowly, like creating structures. Hit the resistance line, came back up, and now it gave a new high. And after that, right now it's still making things. But this is how it works, created lows, and then there are highs now. So support and resistance lines help us predict price actions and also make decisions on what kind of trade we are looking at. Now, there are different types of support resistance levels which we'll discuss further. Now, next is trend lines as well. So trend lines, I have an example. Let's say we have euro odd. Uh, I guess it was euro odd or GBP, JPY. I was just, yeah. So this is a trend. If you see, so most of the people generally you see that they have a upper trend line or sometimes they just have one lower line. I think you can create multiple trend lines in a single trend. For example, this is like support zone over the trend lines. So I also think trend lines are also support, but they are not exactly horizontal levels. They are a moving horizontal level. So of course, this trend line is a lower support. This is the lowest value the price has went on. Then we also have this as a second support. If you see, the price rejected from here, retested it, rejected from here, and then continued. The second time it came back, retested exactly to the pip over the second trend line, and then went up. Now you see one more rejection right here, and then it pushed down. So of course this level is not as strong as this level, but it still is very important because you see, if you want to enter in a buy after, let's say, after some market structure, so of course you don't enter as soon as the price hit right here until you're very sure that the price is going to change. So you want market structure to happen. So what you do is, let's say the price came here and then it is giving market structures, right? It is checking, it is testing out, and then it is trying to break this, but nothing happened, and then you see a movement going up, right? The price action going up. So maybe, for example, on very small time frames, we don't do this specially, but on very small time frames, for people who are scalpers, this itself is a good trade, right? You cover a low, give it a distance of almost 1 ATR or something like that, and you get easy 1 is to 2 to 3. You got a 1 is to 3. So this is how the trend lines mainly work with price action. And also they are the pillars. Because of them, we are able to predict movements, what is going to happen later in the future in the market, right? So this was trend lines. And now we all have candlestick patterns. So candlestick patterns are very important, but they only have value when it is at the right place. For example, now the price showed a reversal sign right here. Okay, you have a doji, and this pattern is called evening star. Okay, so this evening star formation, it's a reversal pattern, and after this, the price continued till here, although it went back and then created a new high and then moved down again, right? But eventually, this price gave a pattern before reversing, and it actually moved a good value. For example, if you see right here, even though it's not a very big risk to reward nor something we would enter, on, it is more than 1:1. Anyway, candlestick patterns are something which we completely rely on for reversals and for entries. For example, let's say, how do you know that even though the price has reversed and if you want to enter, for example, what we generally do is, let's say there is a support line. Let's imagine this as a support line only. And now the price is doing something like this, making lower highs and lower lows. And what happens is, it is here, and then price action traders, what they generally do is we wait for a break of structure, and then we also wait for a higher low to be formed. When a support is hit and we are expecting a reversal pattern, we expect a higher low to be formed, and then we want an entry signal as well. These are the confluences. We want so many things to happen to enter the position to towards buy, right? Something like this. So how do we do that? What makes us take this trade? So first is price action, which is mainly market structures. What market structures are formed? For example, this happened right here, right? And then this trade is going like this. Now, this is not a break of structure for me specifically, because even though there is a huge wick which is crossing this lines, but the price reversed. The price went up, it reversed, and it reversed from right here as well. So it was like the market was very undecisive of where it wants to go. But after that, the price broke structure clearly right here, and then we see movements like this, right? Now, this might not show much information, but let's say where we are exactly. Okay, 25th August. We are on around 18th August 25. So let's see it on 1 hour. Okay. We do see some kind of engulfing, but it is not what we want. Let's say if price were to do this, something like this, for example, the price would have made a candle this big, a green candle this big. What we would have done then was take a simple buy, or maybe even if the price would have made smaller engulfing candle, which is eating the bearish candle, we would have entered a buy, and that would have given us a good structure. So what is an engulfing candle? This is an engulfing candle right here. This is also an engulfing candle, but this is not confirming any break of structure so far yet. I mean, the break of structure really happened right here, not here, right? But on smaller time frames, things are very different. I do take entries on smaller time frames as well. Now, we can't take a trade right here because this is, we can't see a structure forming right here, right? There's no structure. So this is a higher high, so let's say lower high, and this is a lower low. Until this is broken, we don't see anything. But over the period, price did everything else, and now the structure was broken, and then the structure was broken again. So when these structures are present, the trades are easy to take on these places. When there is price action like this, we can't decide what kind of trend the market is going to be in. So anyway, let's continue back on candlestick patterns. So there are different type of patterns like evening star pattern, shooting star pattern. This is a shooting star candle. Okay. So price tried to push up. Then a lot of sellers came in. There's a story behind the candle. A lot of sellers came in and pushed down. Eventually, on the next candles, you can see the price is going down. And these are 1 hour candles. So, of course, these candles took time to make decision. A lot of traders came in and pushed the candle down. And eventually, it came in over here. Now, this was near the resistance level, which is good enough. A resistance level, like this is not exactly a resistance level. A candle over right here is not going to mean much. A candle over right here, like you can see a lot of traders try to push it down, but buyers came in, the same story. But as it is not at a resistance or a support level, we do not get institutions and everyone to come in, and that is why we don't have so much liquidity in here to push in a particular direction. So these patterns only mean something, candlestick patterns only mean something when they are at the right place, not anywhere in between of the chart. So now let's get into the detail of these pillars. First, let's see horizontal levels, okay? So we have different types of support and resistance, and one is horizontal levels, which is just marking on, for example, this is a daily time frame, and we have, hold on, just bear with me. So we have daily support resistance lines right here, right? And even though it's not looking pretty on daily, let's say this is on 4 hour, we can see clear support and resistance happening. at these places, right? So these are horizontal levels, and then we have dynamic levels. For example, by dynamic levels, I mean, let's say we have an EMA 50 or EMA 200, right? So you can see the price coming right here, first time on the EMA 50. The price is moving on in this direction, and then you can see this rejecting exactly from the EMA. Like price made such a big move and it had a very big candle, but a lot of buyers, you can see it's a very big candle. Like there's no other candle as big as this in this area. And a lot of these buyers came in right at this EMA level. Okay, right at this EMA level. Similarly, the price was moving down on this EMA 200 level. A lot of buyers came in and moved the price up after touching and closing near the EMA 200 level. Again, right here, the price closed just around above EMA level. So, can you see how the price is reacting at these levels? As soon as they touch it, like price action is moving fine and everything is going on, and a lot of sellers came in right here, and a lot of buyers also stepped in to move the price up, and in fact, closing above EMA 50. So this is what dynamic levels are, and these are also one type of horizontal levels. Even if the trend, it might look the EMAs are going in a trend, but it gives us at a value where it moves fast, but on time frames like 4 hour and everything, it provides a good support and resistance levels. Let's say even if the price is bearish and the candle is trying to come up, it acts as a natural resistance. For example, right here, once the price pushed, you can see to continue the push down, sellers are reacting at the EMA levels right here as well. The price pushed up again and again sellers stepped in to move the price below the EMA level. So EMAs are something which also acts as support and resistance, and they are dynamic. They can be between a ranging level, like this is a range, right? But we still have EMAs. So having EMA, let's say you are in a buy direction and having EMA below inside your drawdown area under your stop loss level is very helpful. For every time frame is going to have different EMA levels. So of course you can't cover every EMA levels, but it's much better when your trade has EMA levels of, let's say, 30 minutes, 1 hour, or 4 hour, or 2 hour inside your stop loss. When you have this, it's difficult for price to reject. Also, you need to understand this as well. For example, at this point, the EMA 200 is getting pushed so much below easily. Even though the price closed above, you also need to consider while putting your stop loss that if you want to cover this EMA price, you need to make sure that you cover this much of space as well. Because when the price next came right here, it pushed almost the same kind of pips. For example, let's see how much this one exactly was. I know I am discussing all of this too much in detail, but it is very important. It is going to help you take better trades. And this is how I take trades. This is how I choose my stop levels. It's actually my strategy I'm giving you in chunks. So this one is 32.2 pips and this is 30.9 pips. So imagine if you cover the wick of this, then your stop loss wouldn't be hit even if you are in a buy trade and then your price moved just above. It's just an example. Of course, we wouldn't be in this trade. This is just for example purposes, but this is how you use the spacing between these trades, right? Now we are done with dynamic levels. Now there are psychological levels. This is kind of very important. I'll tell you how. Imagine a psychological level of 151.00. I mean, the price did react before at 910, but it is very close to 151. So, in short, the resistance level of 151 is very difficult to break. See, right here. Even though we see a little bit upside, but when the price came around 151, it pushed down. Price came around 151, it pushed down. But of course, there are institutions and a lot of money involved in forex trading. A lot of liquidity is also available right above this price. You would see as soon as 151 is crossed, a lot of people has orders just above 151.00. So some people might have order on 155.1 or something like that. And when the price comes around here, a lot of buyers come in, a lot of buyers are here and they have their orders. A lot of people bought. Now the market has liquidity. It's good for institutions to have liquidity. Now they will be able to sell, right? when they want to enter short, they want more people in it. So they push price above. They are not trying to stop hunt or anything like a lot of sellers might have stepped in right here as well. Okay. But they are not trying to stop hunt them specifically. No one is hunting you. A lot of people, a lot of influencers use words like they got stop hunted. But stop hunted is nothing. It's just institutions and banks trying to find liquidity. Okay. You are just a retail trader who lost money because of it. So institutions are coming right here and trying to get the liquidity and the price goes up. And now when a lot of orders are hit, now they are able to sell at a better price. Now they are able to sell and enter sell positions. Now they have sorted the market, right? We can see the price after this. Once this liquidity is done, the speed of these candles and the size of this candle shows how much institutions has pushed the candles down, because small traders are like us don't move the market in the way institutions and banks do. And this is a clear way of seeing how this is reacting. And now you might be thinking this is 151. Imagine what 150 can be, right? So now this is 150 level, which is a better psychological level. By psychological level, it's like humans love these numbers. We love like 150, 1.5. We love prices like 152, a complete whole numbers, right? So now let's look in history how prices has reacted towards 150. Okay. So first right here, the price after a long time tried to push above 150, and the wick came here, grabbed liquidity, and see the kind of sellers stepped in. The whole candle is this big. Imagine how many sellers came here. Imagine it's like how many hours. Let's measure that. The price was last year around this candle, and this one 4 hour candle, it ate around 12 days of price action in one candle. Imagine that. So that's the psychological level value. Imagine you entering a trade like that. You just crossed so many people. Of course, there might be a news somewhere right here. I don't know. That's why the candle is so big. But these psychological levels help us create confluences. By confluences, I mean, imagine you are in a trade where, hold on, I'll just move this market first. Yeah. Imagine you are in a trade and you have a psychological level of 147 with you. Okay. Now you can see a lot of wicks around this level. 147 is a good support already. A lot of wicks around this level. So now imagine you waited for the price structure and then the price moved really in your direction in a nice way where you can see an engulfing or something like that. Okay. And now after this 147 formation, in your stop loss, you know that first to hit your stop loss, the price has to do this. It has to break the EMA. It has to break your the psychological level. All this stuff. After that, your stop loss will get hit. So it makes your trade very strong. Even though eventually it might hit your stop loss after doing all of that, and if there is a lot of sellers, you'll be happy to know that it didn't happen in a moment. It took a lot of sellers to stop you out. That's the most important thing, and that is how you create your trades stronger. So this was psychological levels. Now we have trend lines again. So trend lines is something I trade very commonly and it's very easy to trade. That's the thing. Now I would have traded this as well, but the only thing is I don't want to buy at a support and I have a better trade in mind, which is this exactly was not a main trend. Okay, this is a smaller trend after a main trend. Imagine, look at this. Look at this trend line. How many rejections are there? How many people have already entered such kind of trades? You can easily catch these trades, first of all, but a lot of traders don't. They miss such price action because they are into indicator based trading. Sometimes they are looking completely something else, but it's so clear. Imagine market gave you so many chances. There are so many structures already present here. There's one, two, three, four, or almost five, six, almost seven. So many places, so many trades missed if you're not entering at these places. You're not looking at these levels. Now, once this is broken, this is acting as a resistance line now, right? You see the price rejected, but what I want, as this was already a big resistance, horizontal resistance level. So all of this, see how it is falling in place combined. There is a horizontal level of resistance, and then we have trend lines as well. So with this, what we see is price exactly rejected from this level to move back down. Now the price is at the same resistance level and is trying to break. Now the problem is, again, this is a resistance level. This trend line is now resistance. So what I want price to do is move, break this resistance level, retest this level, and then move up. What will happen then is the whole price action will be back in this kind of movement, So we'll have better risk to reward on this compared to here, where I am not sure whether it is going to break this or not. I would rather be in a trade, something like this, rather than buying at a position right here and then hitting resistance right here. So that is trend lines. I mean, there's no better example than this. A trend after a trend. There was a trend right here, and then it created a smaller trend. And this is kind of consolidating right now. This trend is more of a consolidation trend. It might move back up or it might not. The next thing might happen is it will just break these trend lines and then the market might reverse completely. We'll see what happens. So this is trend lines. Now let's look at candlestick patterns. I will teach you how to draw these lines, how to find out this support resistance level, psychological levels, and everything in the future videos. Now, right now, we are just discussing what are these three pillars and how these three pillars help you trade in naked charts. There is not much indicators involved here. It's just your EMA lines, that too not always involved. I use it to only place my stop loss and all these levels to check, and also to check resistance level sometimes. So maybe the trend is downward and it just turned bullish, and I want to enter a buy trade, but I'll see a 200 level on a daily candle is very near. So I don't want to enter a trade where EMA 200 is just above me and I am in a buy position. So all these things needs to be checked. If it is not giving you that kind of risk to reward, you shouldn't enter that trade. So this is why I use EMAs. We talked about trend lines now. Yeah. So it's candlestick patterns. So maybe let's see how Euro USD is looking. I don't see Euro USD. Okay, let's see how XAU USD is looking. How many candlestick patterns we can catch on this chart. So first of all, understand this. There might be different kind of reversal patterns showing in different time frames. It's not necessary for you to see everything on 1 hour. Sometimes it's available in 4 hour time frame. Sometimes it's available in daily time frame. So let's first go with daily time frames. What kind of reversals are happening? So look at this. The morning star pattern, okay, and with a really big engulfing. I like this kind of reversal patterns with such candles because it closes bigger than this candle mainly. This is a doji candle. The price is very indecisive. It doesn't know whether the market wants to go up or go down, and then a lot of buyers step in, clearing out the decision. Okay, now this was at some kind of resistance level. Now imagine, you might be thinking there is not much structure here. How do you decide if this is a support or resistance level? So what happens is, let's say you have a swing high right here, and then there are candles. So the latest swing low or swing high and all this stuff, you need to think about those when there is a really good structure and a really good swing getting created. And even though there is no structure there, these are still counted as resistance and support lines. So if you see right here, we call this as resistance for this one, but support for the other. Now imagine how price moved exactly further away from here, from exactly around this place, like almost to the pip, and it gave a reversal pattern. If a person would have entered a trade idea, even on the daily candles, imagine the risk to reward. And in how many days it happened, check that. So let's say we have a support, we give some distance, and we have more than 1 is to 2, which is a great risk to reward. I know it's not 1 is to 3, 1 is to 4, but don't get greedy when you're starting in trading. Don't get greedy at all. Don't keep your stop losses tight. I can keep my stop loss tight right here, and call it 1 is to 3. But what will happen next is it's very easy for the market to take me out. And I don't want to get out. I would rather, if my stop loss is of $1,000, I'll be happy to close at $2,000 rather than closing at minus $1,000, right? I don't want $3,000. I want $2,000. I'm fine with that. Don't get greedy and just close at a, like, keep enough stop loss for yourself. Your stop loss should be something like in a place where if stop loss is hit, that means your whole trade, like your setup, completely fails right there. It doesn't mean you have failed. It's all about win rate. Let's say we have a win rate of 60 to 70%. That means 6 trades or 7 trades you will win, and 3, 4 trades and sometimes 5 trades you will lose, right? So even if you are doing everything right, you are still going to lose. Imagine that. Think about that. This is a psychology thing. A lot of people think I did enter the trade and it was all right, everything was looking good, and it hit my stop loss. You're not sure why it hit your stop loss. It's simply the win rate thing. You know your win rate is 50%, sometimes 60%, and 70. It's dynamic. It's not static at any point. Okay. The only thing is you are capturing 1 is to 2. And even if you are right, your trade is going to hit stop losses. And sometimes it's going to hit in a sequence, which is going to drain you out. At this point, what you do is if you are drained out, you don't trade for the whole week or just come back after some time. Don't directly go back and try to revenge trade or something like that. Just understand this. Even if you're right, your trades are going to fail. Okay. Now, continuing on this, let's see other patterns. Let's see on 4 hour time frame. So, this is again a hammer. You see, it's creating structures, it's creating higher low. So, even this is a hammer, but it's also a morning star pattern. The price went really nice after that. Now, this one is a hammer, right? You can see a lot of traders tried to sell, but then the buyer stepped in and moved the price up. So every candle, when reversing or continuing the trend, these candles have story. A lot of sellers came in, and probably there's some demand right here or something like that. So supply and demand is a different type of trading. And I know other stuff as well, but price action is something which I like the most. So this is what I do, and this is how I became profitable. Supply and demand trading sometimes works, sometimes like I don't have a better win rate over that. That's why I don't do it. So there must be some kind of a demand right here. And that's why price just moved up. So demand is something which comes from a support kind of area, and a supply is something which comes from a resistance kind of area. For example, this exactly is a supply. You see price touched and then moved down. That's a supply. Now this area is kind of a demand. Now, I don't know if the price ever came here. Nah. But you see a lot of this stuff. Supply and demand also works, but I don't see it working most of the times. For example, this gave a really nice price action. It's a 4 hour demand. Look at this. This is not something I was going to cover in this video or any of my videos, but this is a demand. The price, as soon as came around this level, rejected, but buying pressure was too much, and that's why the price never reacted so well. Now there is one more true source of demand. Now this is just one demand. There is another true source, which is right here. Now let's see how the price reacted right here. Can you see this? So this demand was set around on, yeah, 31 October 24, and this demand was used on 24 Jan 25. Imagine it took 3 months for the price to come back here and it still reacted. If you want, I can teach you supply and demand trading as well, but that will be after price action, and I want you to comment if you want to learn supply and demand trading. Else, I won't be creating any course on it. Now, let's see. So we covered right now a hammer, shooting star. We also saw a doji and all these patterns. So again, candlestick patterns are important only if they are at right levels. Now I showed you these candlestick patterns at different levels. You might be saying, what the hell is this? These are somewhere in between. But the thing is, I haven't drawn any levels, right? If I would have drawn those levels and then seen the pattern right there, then it's a different scenario. And you might see a lot of levels already in place. Let's see, we have this daily now, and now let's see on 4 hour again. You see a hammer, it's a reversal pattern. On 4 hour, we can see the trend line happened, and then we can see a 4 hour hammer, and then we see an engulfing. Okay, at this level, a lot of people, I'm sure, have entered this trade based on this price action and see how it worked. It was on the trend line. That's the thing. Now, there are different patterns as well in the market. For example, let me find some. Yes, I showed you the doji one. Okay, let's see up only, but we'll see on different time frames. Now, this is also kind of an evening star. You see this one big candle, there is a smaller candle, and then a big push toward downside, showing a reversal. And now this is a shooting star pattern. Okay, this is a shooting star pattern. So at the right resistance levels, which is 3499, not 3499, it's actually 3500. It's a psychological level as well. Let's just enter the value, right? This is the psychological level. This price, if you see on the top right here, check this area when I move the cursor there. You can see the high is 3500.200, right? Now this is on Ovanda server. This chart is coming from the Ovanda server, and there might be different prices there, but right around 3500, what happened is the price rejected, gave a shooting star, and then next moved like a crazy monster. And see, you can, what a big price action this was. On the 2 hour, if you just saw this pin bar and then this engulfing, and then you see some structure right here and there, even if you enter a trade something like this covering the high, now this is a very good strong support. And now we cover a little more, like let's say a candle could have come here, this big size candle, the price still gave a good history word. Now, of course, I don't take specific entries on 1 or 2 hours or something, but if I would have entered right there, I will show you the exact kind of trade I would have entered in. Now, for me, on the 1 hour, this is the price action and break of structure. This is it, and this is the second resistance below 3500. This is one, and there is another structure right here, but I would have covered this or maybe high of around this area. And now you see price gave me more than 2.85, and it actually gave me almost 3. Yeah, it gave 3, 1 is to 3. So I will teach you how to take trades like this. That was just a different thing, a different information where I just gave you a trade without looking at proper structures. 2 hours is something I rarely enter at. I would rather see structures at the right time frame and try to keep it tight depending on where the structures are. But I always cover whatever I can. Okay. Keeping your stop loss way too much wide is also not good, because then you don't get risk to reward ratio. I guess we are done. I think you now know candlestick patterns. You understand how I take trades, especially you know the three pillars of price action trading. If you like this video, there is much more content coming like this, and I am going to teach you everything for free. I'm never going to charge you for this kind of thing. I'm going to put it on YouTube always for free. So make sure you subscribe, hit the notification bell icon. Very soon I'll share what exact strategy I use to trade, and join me on Telegram. I also give midweek updates. On Sunday I put weekly analysis, so it's like where the market is going to be. For example, this USD JPY, if you see my YouTube channel, you'll find why this position is right here. On Euro AUD, why this drawings are right here. It's all because it happened in the Sunday analysis. And very soon I'm going to start live Sunday analysis as well. So make sure you have subscribed and put the notification bell icon. Make sure you have joined the Telegram channel, because this is where I can communicate with you guys. And if you want to talk to me, you can connect on Instagram. Just DM me and I'll try to respond as soon as I can. So thank you for watching. I'll see you guys in the next video.